What is going on in the notes and real estate market? Well, the good news is it is not that dramatic. And if you're a note investor, it's probably starting to look pretty good. We're going to find out today as we are joined by our amazing team of experts. And we've got the one and only Eddie Speed with us today, who's going to talk a lot about the note industry, what's happening in the market. We're going to get a little bit of an update. But before we do that, as always, hey, welcome to the show. Welcome to NoteSchool TV. We are here every single Wednesday at 11:05 Central Time. So make sure you're joining us. Like these videos, subscribe to the channel. And listen, if you're somebody who wants to engage with us just a little bit more, like you'd like to say, hi, Brian, like right now, like go to the comments, say, hey, guys, we'd love to hear from you. It's a way to engage with us. It's a way to ask your questions and bring them across the web and start to kind of get those off of your chest, right? So it's a great way to get engaged. And if you're brand new to Note School, you're brand new to NoteSchool TV, welcome. And if you're wanting to learn a little bit more, go to noteschool.com/TV to check out a little bit more. We are going to be having a great show. And before we get into the hot topics of the news, I want to remind you, after this show, we're going to have an after party where we stick around and hang out with you guys. We hang out with our guests every single week. And it's just a way to kind of do a little bit more casual approach of question and answer and just saying hello. So if you would, say hello as we bring on our one and only Joe Varnador to talk about the news.
Hey, Brian, how are you today, brother?
I'm really good, man. Hey, listen, I've got a deal I want to make real quick.
Okay.
I want you to tell us what the hottest news is. And if you're watching this show, if you learned something today, like the video. That's what I want to see. Give us a like if you learned something. So take it away, Joe.
Yep, absolutely. So, Brian, you scared me a little bit when you came on there. It was like, what is going on?
I came in pretty hot.
You did. I wish they'd have let the camera run a few more minutes on that, so to see how long you could have held that. That would have been great. Anyway, let's go into the news, guys. We have two great news stories before we bring on Mr. Speed, and the first one is it's titled "Lakeside, Idaho City is America's Hottest Market in the New Wall Street Journal /Realtor.com Index."
Real quick, Joe, real quick, can you share your screen real quick? I think it accidentally got clicked off.
We've got, I'm not doing that today. There it is.
There we go. All right.
Okay, perfect. Yeah, so Realtor.com, and so Coeur d'Alene, Idaho, right, is the new hottest city. It bumped Austin, Texas out of the hot spot, right, out of the #1 spot. Austin is #2. Interestingly enough, Seattle was one of those hot spots. And our past guests, Larry and Mariska, they lived in Spokane and wanted to move into a city that was not quite as hot as Seattle. So they moved to Coeur d'Alene.
They're the variable. It's
there
them.
It goes. Right. So Coeur d'Alene, Austin, Texas is now #2. Springfield, Ohio is #3. Billings, Montana is #4. And right across the river from Coeur d'Alene, Spokane, Washington is #5. And that tops out the #5 pieces there on that. So, yeah, who would have thought it? But it's all about lifestyle, right? It's all about lifestyle. And then the second piece I have here is what is preventing homeowners from selling, right? And, the article from DS News from a couple of days ago, a lot of people think, well, it's the pandemic and all of that, but it is kind of what I have thought all along. We've all talked about this, you, me, and Eddie. And according to Daryl Fairweather, he's kind of, he's an economist. And he kind of sums it up, right? And it says there's been an ongoing debate about whether fear of coronavirus infection was keeping homeowners from selling. But now that there's a third of the Americans are fully vaccinated, Well, it says homeowners are staying put because if they move and buy another home, they will face a very competitive housing market, and they don't sell to take advantage. They don't have to sell to take advantage of all-time low mortgage rates. All they've got to do is refinance. So there it is. I certainly would not sell in such a crazy high market and then rebuy. I would hold on to my dollars and just kind of see where it heads over the next little bit, right? That is the news for today. And Brian,
that's good.
You and I have the distinct pleasure and honor of bringing on our visionary and founder of Note School, Mr. W. Eddie Speed. How are you, Eddie?
How are you?
There he is.
Well, as you may have guessed, I have been very busy this morning, right? Because Joe, you're part of the team that helped scrape data for me, and Bob Repass and some other guys helped me, and we have well, Brian, we really do have a wild market, and it is about as dramatic as you made it sound.
And it's not just in Coeur d'Alene. Is that what you're saying?
Oh my God.
Well, you fill us in.
All right, are you guys ready?
I'm ready.
Are you ready for the 40,000-foot view of the market?
I see it, and I see Albert's ready. I see Chris is ready. We got a lot of people here attending who are ready for the update.
All right. In the bottom left corner of these slides, there's an email address, guys. And that email address is if you would like the slide deck that has these data slides, reach out to us, and we'd love to send them to you. Okay?
Yes.
All right. Joe, that's an iceberg.
That is an iceberg. And we have an Airbus A380 that was flying over that iceberg, right?
We have what's great, and we have what's not so great.
Yep.
All right. You get the analogy?
I get the analogy 100%.
All right. Let's talk about what's hot. What's on fire? Huh?
What's hot and what's not? Let's do it.
All right. Well, first of all, the stock market surges. It continues to surge, and it's breaking records, and whatever your affiliation is to the stock market, if you have anybody feeding you information, Joe, if you don't buy stock now, you'll never be able to afford it. You know what I'm saying?
Nod, right? You got to nod when you're doing
that. All right. Well, a lot of people in our business are not just focused on stocks, but they're focused on alternative investments. Let's talk about the number one alternative investment, and that is the housing market. Okay. This isn't commercial real estate. We're going to stay focused on housing for a little bit because it is on fire. Commercial has some interesting elements in the market, and there's some things that are really good and not, and it's just a big story, and we'll, have to continue that at another point. First of all, inventory is down 40%, guys, and that made annual prices grow to just under 12%, okay? And that was in January. Well, it's even gotten bigger, right? Bigger story. So we're going to look at some of the breakdown in the market, some of the details, as Joe mentioned. Joe, Coeur d'Alene, Idaho, which I have been there, and
beautiful.
I have a number of friends that are there. In fact, the largest real estate investor in Coeur d'Alene, Idaho, is a friend of mine.
Oh, wow. Didn't know that.
That's a fact. And but that's a hot market. And the truth of the matter is that also in that market, though, it is not a top 30 market. So sometimes it's not listed. Austin would be a top 30 market.
Correct.
Here's some amazing stats, guys. This is hot off the press, as in it came in yesterday afternoon from Redfin. Okay. So these are pending sales under contract within 1 week. So fellas, what this is telling you is that set properties that are under contract 1 week after being listed, 46%. Say it ain't so, Joe.
Absolutely.
How about that? Here's another stat. 45% of the houses are selling above list. Okay. And 45% sold And that is up 18% from a year ago. So that's a pretty significant number. Almost double.
Eddie, my brother-in-law lives there in Highland Park in Dallas. Put his condo up for sale last Saturday. Sold it before noon, 20,000 over list in 2 hours.
It's just the norm.
Just the norm.
All right, here is the sale to list ratio, Joe. The sale to list ratio, and it is now climbed over 100%. So what does that mean exactly? That means that over 100% of every property listed is selling for over its list price.
Correct.
It has broke 100%.
Yep.
Now, fellas, I don't know what you call a wild market, and I don't know how dramatic you can act, Brian. But this is pretty dramatic.
Yeah.
Here's another thing. This is from Lending Tree, and they listed, Joe, the top 10 markets, and there's a little chart there that shows you. And obviously, as you can see, these markets are really hot, and then you're seeing a little pattern here, and you're seeing a little pattern here. All right, the hottest 10. They're all hot, Joe. Everything's on fire.
Yeah.
In fact, to show you this, what we did is we gathered some data, and this was a change from January to February. You remember this data comes out late, Joe. So this is, and there's a couple of interesting things here. There's some markets that are increased in a month, Joe, over 2%.
Crazy.
Right? And this is the change, Joe, from a year ago. And there are some markets that have increased there.
You guys in Phoenix, man.
Yeah, I've done a lot of training in Phoenix here in the past few months, and I'm doing an event where I'm probably speaking to the top 100 house buyers in Phoenix in about 2 weeks. And let me just tell you something. They're pretty clear about one thing. If they don't add creative financing to their business, just trying to buy something at a low price is probably not the most effective technique out there.
Absolutely.
Yeah. And nationwide, Joe, this is everywhere. And this is an index that they do, this index level, and take a little more to explain all that is, but it's just sort of a confidence level.
Right.
An average of 1.1% change from January to February, and an average from a year ago of a 12% increase. That is nationwide in housing. Now, what is driving this? Well, they say the number one factor is FOMO. What does that mean? Well, it means fear of missing out. There you go. That's actually not such good information to me, Joe, because I would rather a market be driven by other variables, but they say this is it. So I made you this little slide, Joe.
Okay.
It's all about FOMO. Fear of missing out. All right. So this is a big factor, and there's a lot of good stuff happening to residential real estate. We do not want to exclude that. We don't want to make that. That's not like that's not part of the equation. It is a huge part of the equation. Now we're going to talk about things that aren't so good, Joe, and we're going to talk about opportunities. Right?
Broken glass.
We're going to talk about how to find the broken glass and how to be the problem solver. First of all, lumber prices. Joe, I will tell you this, that in the active real estate investing that I'm involved in right now, I'm concerned about doing anything that has a heavy rehab in it. Okay. Lumber prices have tripled. And, it's the old story of a 2x4 used to cost $4 last February, and now that 2x4 kind of costs more like about $12.
That's right.
Right. And it's not just lumber, but lumber is a big deal. And if anybody's been in there involved in it, there's a case. So there's some deals that would not be a deal for me to do real estate investing right now, Joe. I'm not just concerned about what the price I have to pay for the materials, but I'm concerned about accessibility of the materials.
Right.
Right. There's a lot of materials, this that we're seeing the car industry complain about this. So accessibility is a big deal. They got all these ships and harbors and the Suez Canal that were in the Suez Canal and stuff. Now they've found their way out of the Suez Canal, Joe, and now they're just stuck in the harbor. They can't unload them, and it's a problem.
It's a lot. Yeah, that's right.
That's it. So the big thing that we talk about a lot, of course, is the significant amount of difference in who could get credit. Call it about a high in here, Joe, and we're trending up a little bit. It is not projected that the underwriting is going to change that much, but Joe, if you took the high before the virus and now, we're still. Just call it north of a 30% decline in who can get a mortgage.
That's a huge gap.
1,000 people that could get a mortgage in, February in 2020 and March in 2021, 300 of those people don't get a mortgage anymore. Here's my question, Joe. Opportunity or bad?
Certainly an opportunity for us. And, Eddie, going back to the lumber slide, not only that, it's the labor force in order to do the rehab, right?
No doubt about it. So, by the way, Wall Street Journal, Joe, it's got to be true when the Wall Street Journal finally writes about it. And so they did write about this and the credit crunch and need a mortgage. Good luck. And so it's real now, Joe, because the Wall Street Journal says it.
He said it was. Yeah.
Ellie Mae says that the average down payment is about 19%. So the average loan to value of a conventional loan is about 81. So just take the difference off. And then Lending Tree said, well, the average in the top 12 metro areas is 19%. The average is 21% down in metro areas and an average overall of about 19. So this is about 20% down. Just call it about 20% down is what people are paying down. By the way, Joe, let me just tell you a little secret. What they're not measuring in that is what people are paying at over list.
Exactly.
Right. They're taking list price and they're paying 20% down of list price. But if they're paying over list, that's also in the down payment numbers.
That's right.
So what we see is this: seller financing when the market is really good and lending is easy. Seller financing is, let's just call it, Joe, a sliver of the market. It is not a major contributor in the market. So when the market is really loose and mortgage financing is easy, then seller financing is really no big deal. The virus comes along and all of a sudden we see scarce lending. And all of a sudden, Joe, we see what we call a gap. Right. And that gap is a market that could be filled with my puzzle piece of the guy seller financing. Got a lot to say about this. This is a huge factor in the note business. The biggest we've seen in a long time.
Yes.
Because you can finance such good people. Okay, M Report says house flipping is down. Yes. House flipping profits are down. Well, that's obvious, Joe, right? Isn't that obvious that house flipping profits are down because people are demanding a crazy price?
Right.
Why am I going to Phoenix? Why do these guys show up at Note School all the time? Because they're trying to learn creative financing along with buy low, sell high for cash. So they're adding two pieces to their business. This is probably the biggest opportunity that real estate investors are seeing today, is to not just stick with the buy low for cash price, but also add the creative terms. And that's a big deal in what we make it part of. So this is an opportunity for the real estate investor that can look beyond being a one-trick pony.
Correct.
Right? Let's talk about the landlords for a minute. I'm going to blow through these really fast. 72% of every 1 to 4 family, 72% is all owned by somebody that's a small-time landlord. They own 1 to 5 units in their individual name. Okay? So the other corporately owned properties, they're just not a major significant force. I read, articles and corporate America's buying houses and stuff, and I eliminated a lot of noise today just because it was too much to present. But the truth of the matter is they're still just a sliver of the market.
Right.
Right. And a lot of these small-time landlords self-manage. Now, Joe, what does self-management look like?
That's probably being kind there. It's probably a little more harried than that.
That is the opportunity. Small-time landlords are getting killed. I did do this slide the last time, but I want to just renew it because it's so important. 10.25 million renters owe $53 billion in rent. Small-time owners manage 77%. Now, they call small-time owners, this is people that own 1 to 10 houses, not 1 to 5 as the ratio I gave you a while ago, right? The smaller the number of houses they own, the more likely they are to self-manage.
Yeah.
That's an interesting fact.
Yeah.
So the Urban Institute says that they owe an average of $6,000 in rent, and that housing providers can't cover the shortfall. This is your distressed seller, the hobbyist landlord. This is it. This is the guy that we would teach you to go chase.
Yep.
Right? Lenders, listen, guys, there's an issue here. We're talking literally. If you're looking at these stats here, loan servicers are still writing these monster checks on a monthly basis. $3.3 billion in principal and interest payment. Add on to that, if they're collecting escrows, they have another 1.2. This is $4.5 billion a month they're writing. Call that $1 billion a week.
Yeah.
How much longer can this continue at $1 billion a week? Can loan servicers continue to survive and do this?
That's right.
Right? The other side is delinquency. Delinquency is a giant deal. In fact, in the top 30 metro areas, the delinquency is crazy high. Average on all FHA loans, Joe, average nationwide is just a tick under 15%.
Yeah.
Well, Joe, I have a little experience in that side of the business. I'm glad you asked.
Yes, we do.
So non-performing notes, they are becoming a thing, a big thing. And we are having a lot of people come to Note School trying to learn about that side of the business. And bottom line is, Joe, if I take loans that are 30 days or more delinquent, we are just under 3.5 million loans. That represents 6% of the market, Joe. 6% of every mortgaged house is delinquent, and then another 3% is in forbearance.
That's a pile.
So let's talk about this. Stock market surges. Awesome, right?
Yep.
Raging resi real estate market. Anybody argue that statement? Right? Low interest rates. So we have very low interest rates, which is definitely driving the affordability of the market. It has to be affordable, Joe, right? Prices are going up. The rates are what keep the payment still affordable.
That's right.
If that changed, it could affect things.
Just a little bit.
FHA loans, 14% not paying. Overall, 9% of residential mortgages not paying, either in forbearance or in default. Loans that are in default outpace loans in forbearance 2 to 1.
Right.
10 million renters owe $54 billion in back rent. 35% decline in mortgage credit availability. And the commercial real estate market, Joe, is in a lot of these non-performing loans, we are hearing it on a weekly basis. There are portfolios, tapes, they call them. That's just a spreadsheet. of these non-performing notes secured by commercial properties are now coming to the marketplace, right? Let me ask you guys a question. Opportunity or not an opportunity? Is the market bull or bear or both? Depends on which lens you're looking through, right?
That's exactly right.
All right, so let's just talk about this. By the way, remember I told you guys, if you have an interest at all, then you can go to info@noteschool.com and you guys can go get, see if my little laser pointer here will show you this. You guys go right there and we will be glad to provide you the slides. I call this presentation today, The Market Beyond the Mask. You like that, Joe?
That's very clever, Eddie. That must have came to you in a dream. Yeah. Seriously, it's good.
Yeah. All right. So I don't have a crystal ball, but I do have a rear view mirror. How about that? And I've lived through some rear view mirrors and black swan events. Now you may look at this market and say there's nothing black swan, but I look at this market and say there are some black swan elements to this market. And I see this as a runway of a terrific opportunity for us, Joe, not for the next 6 months, literally for the next 5 years.
That's right.
Right. And so we have a lot to say about this, and not just that it's good in some areas and bad in some areas, but how we find the crease, how we find the dent in the market. That dent is our opportunity.
Right. That's it.
Joe, I'm out of soap.
Eddie, that was bigger than a wagon wheel, right? And a wagon wheel is pretty big, as your dad used to say, right?
That's it. That's it.
All right, guys. So we'll bring Brian back on. Brian, that was an amazing presentation. Saw the blurbs coming up on the bottom.
Yeah.
Guys, I mean, it is what it is. You know, that's
it
exactly
is
where we are right now.
Well, what's fascinating to me is two things. One, I noticed we had one of our guests, Todd, was jumping on, and you saw him start tagging a bunch of people on Facebook, I saw. And this is something that I want to point out, because a lot of times as investors, you hear this great insight and you say, hey, so-and-so could hear this. Man, jump on, tag your friends, share it with your friends. I've already sent a couple of texts even during this to some friends to say, you've got to at least listen to this information, because it's so important that we are really approaching the market with open eyes. And for those of you, like Eddie said, hey, a lot of you feel like you missed out on the 2008 opportunity. It's easy in hindsight to be like, oh, look how cheap those houses were in 2010 and 11. The opportunity is in front of you. Eddie just showed you. So you've got to get engaged. And we'll talk about that in a second. Before we do, let's talk about our sponsor, the Feeding Frenzy Friday. Well, each week we are sponsored by both Notes Direct and the Feeding Frenzy Friday, where we will take a note from Notes Direct and we'll break down the details of that note to help you master your level of due diligence and confidence to go out and take action, so that you can buy a note as easy as you could buy pretty much anything on Amazon. It's a click a buy button, right? But you got to know, you got to have the knowledge to do the due diligence to make sure what you're buying is what you really need. So go and check those out. It's a great way to get involved. Another way to get involved, kind of like I was talking about a little bit ago, is you've got to see the opportunity. Eddie just showed it to you. The question is, how do you get involved? For a lot of you, you're already engaged in the note business. Great. Let's start taking action. Some of you are trying to figure out what that next step is, or I'm brand new and I don't even know what to do, right? Listen, we've got you here. We've got the information we'd love to share. Go to noteschool.com/TV. It gives you an opportunity to get an ebook. We'll give you a little bit of training. We'll help you take those next steps. As Eddie says all the time, you can start to learn one coat of paint at a time, right? It's easier to learn little steps at a time than here's all this information. And so it'll really start to make things a little bit better. Or if you're somebody who you just need answers right away, you need them right now, reach out to our website, noteschool.com, click the contact us button. Maybe you've got a burning desire that you need help with. Simply reach out. We'd love to kind of engage with you, see how we can help you. As always, if you love hearing from somebody like Joe, who has over 30 years of experience, or Eddie, who's got over 40 years of experience in this business, man, please like these videos, subscribe to the channel. It really helps kind of tell us a little bit more that we're putting out good content. And most importantly, click on the subscribe bell notification so that you are able to jump in like Joseph and James and Todd. And a lot of these people are going to stick around for the after party that we're about to have. But for those of you who can't stay, thanks so much for coming. It's always good to see you online. I love to see all the comments coming in. For those of you who can stick around, we'll see you on the other side. Well, Eddie, we had a good show today. I'm telling you, people are active. We had a lot of people on. We've got Gary saying awesome information. I'm on board. We've got David saying, let's go. It is time to take action. It's time to make it happen. And so glad you came on board. Wanted to make sure that before we get too much into the questions, if you have questions, be sure you're typing them in so that we can kind of talk a little bit about those during the show. But Eddie, Joe, any other thoughts before we get too far down the road here that you want to share?
Well, the reason that the market update is so relevant and so meaningful is it identifies the crease in the market. Anybody can read the headlines and figure out that residential real estate's on fire. I mean, we try to grab good data because, it's relevant. It's relevant in our conversations, right? It's relevant when you're looking and talking to somebody or you're not surprised in the market. So anybody can read the headlines and figure out things are good. That means, Brian, that if I own a piece of property and I wanted to sell or finance it, I could sell it for a premium price, right?
Yes.
And I could sell it to somebody that has super high good credit, right? The best pool of buyers and the best opportunity to sell my property with seller financing now than there's been in. See, that wasn't true there was a lack of financing in 2010, but there was also an instability in the market. Now we've got a hot real estate market where we can sell it, and we've got a credit crunch, weird combination, right? We've got a credit crunch, and that means that I know that I could use seller financing to sell my property for a premium. On the other side, yes, housing's on fire, and real estate investors are having to reinvent themselves.
Yeah. And, I've just this week, guys, you were talking about lumber. And so my dad and my son are doing a rehab right now. Part of the roof is a flat roof, right? So number one, that piece of that 2x4, or not 2x4 piece of plywood that was $22 last year is now $82. And they've had 3 people out look at it, and it's 4 months out, even in a little town like I live in of 4,500 people, 4 months out, trying to get a rehab done. Talked to a burnout landlord the other day, and he said, well, yeah, I'd love to sell you my place. And I said, well, I'm not going to be able to make that first payment to you until I get those folks out. And he thought about it. Well, that's okay. Right. That's okay, because at least I have an end. I don't have to get them out myself. I don't have to deal with them, So, guys, it's time. It's time.
Yeah. And what's interesting is I think so many times when the market shifts, it presents you with half of the puzzle and you got to solve the other part of the puzzle. And in this instance, what Eddie just shared with us, just if you really are looking for the magic in what he's saying, is there's not only an opportunity to buy assets right now, which is, hey, that's part of the puzzle, right? But there's also a huge opportunity for who you can sell them to. You have giant pools of both, right? That you literally just have to gain that knowledge, go out, be willing to help people and put them together, and you can start growing your business.
Yeah. And, guys, I spoke with Lois and Cynthia yesterday, a couple of our students, and they had a property that they listed on Facebook Marketplace, not a property, they're in Houston. They had 160 inquiries within 24 hours on the property they had listed on.
That's it? Only 160? Are you missing a zero?
24 hours. Yeah.
Yeah, it's absolutely mind-boggling. So it's a really great opportunity. And kind of looking at back on the mortgage side, Ben had a question, and I'm not sure we have the exact numbers, but I know that there were some reports on this. He said 9% of all mortgage homes in default or in forbearance. What was the stat prior to 2008? Does anybody have that number off the top of their head? I know that CFPB published some information on this.
I know that the 9% of the people that are not making a payment for those two reasons, I know that equals a stat around 2010. And so I just off the cuff know that. That is a great question, Ben. Our delinquency is way higher than it was 2 years ago. I mean, 2 years ago. Yeah, year and a half ago. I mean,
look back.
We had pretty immeasurable delinquency back then. And so once again, it's a weird market. Every market I've lived through, like when the market's on fire, then usually lending's on fire.
Mm-hmm.
When the market is bad, that's because lending is bad too. Now we have this opposite scenario, which is really, to me, opened up this incredible gap for us.
Yeah.
Because if you can buy properties on creative financing terms, reselling it, Brian, is a no-brainer. And earning transactional income up front is essentially a no-brainer if structured correctly.
Yes.
Yeah.
And long-term cash flow on top of that.
Well, if you're I believe this. If your wealth isn't growing at a faster pace than your transactional income, you're not really going in the right direction.
Yeah. Absolutely. And, I don't know how this triggered this thought in my head, but when you said that, for whatever reason, I started to think about how what is also different about this market cycle than the last is we've almost been given this runway to really master this before these eviction moratoriums and foreclosure moratoriums get released. And so there's like this starting day in the future, and it could be moved. We're not trying to say that we have the date of when everything changes, but currently it's at the end of June. And so you've got this 2-month runway to say, hey, I could learn this and I'm not missing out on the opportunity. Whereas in 2010, you're scrambling, trying to learn as fast as possible so that you can be a part of what's going on.
Yeah. And Brian, it looks like that's going to be the day. There was some bantering back and forth. We were all reading kind of behind the scenes, a lot of arguments back and forth and stuff. And I think most of the regulatory agencies have backed off that position completely. That it's the day of reckoning is like really close. And so we're going to see that as an opportunity. And once again, we still have a shortage of houses listed. And for all the reasons, Joe, as you know, I've told you about this. I mean, I'm the same way. I mean, I'm a deal maker, and Martha and I are both been in the business forever. And I look at my personal home and think, good gosh, I mean, I could just sell this thing and just ring the bell, right? And then all of a sudden I'm like, but where would we move?
Yeah. You got to go rent for a couple of years or something.
I don't know. Hey guys, if you think we've got this all figured out, you're not wrong. We just have we have some slivers figured out. This whole market puzzle is pretty crazy.
You know what's great though, Eddie? You can make a lot of money with some slivers. you really can. And just to sum this up as we wrap up today, if we were going to say what's the best advice you have for making some money today and money tomorrow, wouldn't you say that it's leveraging this opportunity to add creative financing to your acquisition model and radically change your business?
I wake up every day as the visionary in Note School. I wake up every day trying to put the binoculars up to my eyes and see where there's an opportunity. I believe there's a giant one in front of us.
That's awesome. Well, guys, this can be simple with some help. Just get engaged. If you need help, go to noteschool.com/TV or reach out to us on the Contact Us tab at noteschool.com. We'd love to help you take that next step, whatever that looks like for you. Until next time, keep going. Don't give up. Keep working. There's a huge opportunity. We'll see everybody next Wednesday at 11:05 Central Time. Until then, have a great week.